A very warm welcome. You're watching Market Cafe on ET Now. This is Priyanka Pul. Along with me is Shriyansi Shah. Shriyansi saying what we saw: persistent FI selling, lackluster earnings, and of course the high valuation pressure. That's what we saw the Indian markets going through last week. But the US market is altogether on a different mode and zone. We saw US markets hitting one of the best week of 2024 last week, especially after Trump's victory. Bitcoin is hitting $80,000 per, and then these are the key indicators coming in. But what are the cues that lies ahead for Indian markets? The key earnings as well as the corporate action, the buzzing stock, everything we get you. We set you up for the trading day for next 1 hour. But Shriyansi, first, the US markets, they are all together on a different zone. We saw the best week for US markets coming in last week, 24.
Well, absolutely. That just about sums it up, because when you take a look at the US markets, you do see quite some strength coming in. When you take a look at Dow Jones, that's the one that that ended the week after topping 44,000 for the first time. S&P 500 as well, closing at record highs to cap election week rally, and that's the kind of rally that we've seen coming in. Really just sums up the move that we've seen the last week gone by on a very good footing. When you take a look at the Dow Jones, like I mentioned, it ended above near those 44,000 levels, but did also top those 44,000 levels previously before ending the day. And when you take a look at the uptick coming in for Dow Jones, you're looking at 0.6% uptick coming in for that one. Now, when you take a look at the S&P 500 as well, 0.4% uptick is what you have there as well. Record highs is what you're looking at. Even when you take a look at the S&P 500, but it was the Nasdaq that lacked just a tad bit. So an uptick of just about 0.1% is what you saw coming in for the Nasdaq. But intraday record highs is also something that you're looking at there as well, Priyanka, because when you take a look at Nasdaq as well, record highs were notched there as well. All three averages did finish the week at record closing levels. That's the kind of roundup that you saw coming in for the week as well. It was, of course, a strong week, like I mentioned, across the board for equities, due in large part due to the huge rally that we saw following Trump's victory. Now, President-elect Donald Trump also secured quite the victory, and you've seen that move being reflected on equities. So when you take a look at the S&P 500, that finished the week up just 4.6% for the week. Dow was high about 4.6% as well, and both indexes did notch their best week coming in since November 2023. So those are the kind of moves that you saw coming in for these two indices. These were, of course, the ones that performed well, but you do have the Nasdaq that also outed even these moves, which are very strong moves, totaling a 5.7% advance coming in. While when you take a look at the small cap benchmark Russell 2000, that was not far behind at all. In fact, that was surging 8.6% thereabout, and those are the kind of moves on a weekly basis that you saw coming in for all of those indices. That largely looks like the kind of roundup that you have at hand when it comes to US then, Priyanka.
All right, but then in terms of oil, if you talk about, not very good signs, because if oil is trading with a pressure, that indicates a global slowdown also. And there were a couple of factors which is coming in from China market right now, which was weighing on oil prices. Oil prices fell more than 2% on Friday as the traders grew less fearful of prolonged supply disruption from a hurricane in the US, Gulf of Mexico. But there was another cue that came from China, that the latest economic stimulus packages that has failed to impress some of the oil traders. US West Texas Intermediate future that led down the decline, down by 2.74% or nearly $1.98 per barrel. This one closed at $70.38 per barrel. Now, of course, the Brent futures, they also fell 2.33% or nearly $1.76 per barrel, and this one settled at $73.87 per barrel. At the same time, gold, which has been always considered a safe haven, now that one has logged the biggest weekly fall in over 5 months, and prices majorly dropped on Friday and logging its steepest weekly decline. This one's pressurized majorly by the stronger dollar, and of course, as the markets are absorbing the implications of Donald Trump's victory and the potential impact on US interest rate expectation. So spot gold, that one fell by 0.8% to settle at $2684 per barrel, per ounce. These are the two key indicators coming in from oil as well as gold.
Well, absolutely. Lots to keep an eye on when it comes to the US markets as well as oil and gold. But let's also take a look at cryptocurrencies, because they extended their rally coming in on Sunday with Bitcoin also touching $80,000 for the first time ever. In fact, the price of the flagship cryptocurrency was last higher by 4.5%, $79 is the kind of level that you're looking at. Now, smaller coins, of course, saw a bigger move coming in as investors did continue to digest the implications of a second term for President-elect Donald Trump, and that is something that you're looking at. Even when you look at Ether as well, you're looking at a rise of just about 3% coming in after passing those $3,000 levels on Saturday as well. So it was a good weekend coming in for the cryptocurrencies. And you can see that reflected for Bitcoin. Now, Bitcoin, of course, was deemed a safe asset regardless of the outcome of the election. And it is not considered a security even by the Securities and Exchange Commission. But you did see quite the move coming in when you take a look at Bitcoin, Ether, and other cryptocurrencies as well, that also stand to gain much more from the crypto-friendly regulatory environment that Trump has promised and also appears to be a priority for many in his inner circle. And that is the reason why you're possibly seeing that kind of move coming in for cryptocurrencies. Now, the big question, of course, remains whether $100,000 is in sight for Bitcoin soon. But Priyanka, it does look like that question is definitely going to be answered with President-elect Donald Trump also coming to power after January 20.
All right, $100,000. That is going to be a mark, but at least it is trading at an all-time high level of $80,000 for sure. But now let's get you some more global stories. Let's kickstart our coverage this morning with important comments coming in from the Minneapolis Federal Reserve President Neil Kashkari. He says he believes that Trump's tariff proposals could worsen long-term inflation if the global trade partners were to strike back. Important to note here, during his first term, he sparked a trade war with China by imposing a series of import taxes on Chinese goods, which triggered the country to retaliate with its own set of tariffs on the US. One of his primary economic proposals in the second term is to impose universal tariffs on all imports from all countries with a specifically targeted 60% rate on China.
Well, absolutely. But moving on, let's get you the roundup coming in as far as the Asian markets are concerned. Firstly, let's take a look at Nikkei and see what that one is up to at this point. When you take a look at Nikkei on your screens, 0.2% downtick is what you have coming in. For that one, let's also take a quick look at Shanghai and see what that is up to, because you do have that shade of red being reflected on Shanghai as well. 0.3% downtick coming in for that one. Hang Seng as well, when you take a look at that one, that is also clutching onto that shade of red on your screens. Downtick of 2% coming in for Hang Seng. That's the one that is leading losses at this point. Let's also take a quick look at ASX 200 and see what that one is doing at this point, because that is also holding on to that shade of red at this point. 0.4% downtick coming in for that one as well. So that largely is the kind of roundup that you have when you take a look at the Asian markets. Let's lastly also take a look at KOSPI as well as ASX 200 and see what those indices are doing, because when you take a look at KOSPI, you do have that shade of red being reflected there as well. 0.4% downtick, and ASX 200 as well. That is the one that is also following suit, because when you take a look at ASX 200 on your screens, 0.4% downtick coming in for that one as well. So that largely is the kind of roundup that you have coming in for the Asian markets. Not good moves, not a very good handover coming in, at least as far as Asia is concerned. Even despite that strong handover that we have coming in for the Wall Street, you do have the Asian markets clutching on to that shade of red at this point. And of course, back home, we did close around the 24,140 levels. And currently what is being penciled in is a rather subdued start. And possibly because of the kind of handover that we're seeing coming in when you take a look at Asia then.
Okay, but then what is weighing on the Asian indices is that the lower than expected Chinese inflation print. The consumer prices rose at the slowest pace in 4 months in the month of October, while the producer price deflation, that one deepened even as Beijing doubled down on stimulus. Remember, country's top legislative body unveiled a $1.4 trillion debt package. Headline inflation rose 0.3% from a year earlier last month, slowing from September's 0.4% rise and marking the lowest since the month of June. However, core inflation, excluding the volatile food and fuel prices, that one rose by 0.2% in the month of October. Now, this one has accelerated 0.1% in the month of September.
Alright, then moving on to some stock-specific action then. Shares of Tesla zoomed a whopping 8% on Friday, taking their market cap to over $1 trillion. Remember, shares have rallied 29% in the week gone by after President-elect Donald Trump bagged his second term in the Oval Office. Evidently, investors have grown optimistic that the leader's return will benefit the EV maker. Tesla also rejoins a growing club of tech names that are now worth more than $1 trillion, including the likes of Nvidia, Apple, Microsoft, Alphabet, Amazon, as well as Meta. In fact, Tesla's market cap also first crossed the $1 trillion mark in October 2021.
Just imagine, many countries even do not have a complete GDP of this scale. But then Tesla has, of course, made another height, another remarkable mark, which is that its market cap has now hit $1 trillion. But now shifting focus to earnings now, Sony reported a 73% increase in group operating profit for the July to September quarter. Now, this is driven by strong performance in its gaming as well as its network segment. The company has also raised its fiscal 2025 revenue projection to 12.7 trillion yen, a slight increase from its prior 12.6 trillion yen target. The game and network services division posted nearly triple its profit, reaching to 138.8 billion yen, while revenue in this unit came in at 1 trillion yen. This is an 11% of increase on YoY basis.
Alright, then let's take a look at more stock-specific action. Then US has reportedly ordered Taiwan semiconductor manufacturing company to halt shipments of advanced chips to Chinese customers that are often used in artificial intelligence applications starting today. Now, the US Department of Commerce sent a letter to TSMC imposing export restrictions on certain sophisticated chips of 7 nanometer or more advanced designs destined for China that power AI accelerator as well as graphics processing units.
All right, with this, we stay for a short break here. More to come on the other side of the break. Don't go anywhere. Welcome back. You're watching Market Cafe. Now, in a bid to boost investments in the renewable energy space, government finances are preparing a plan to infuse over 12 lakh crore rupees in the industry over the next 5 years. Prakash Priyadarshi joins it with this exclusive story. Prakash, over to you.
Yes, sir. We are learning from our sources that the government NBFCs are planning to invest more than 12 lakh crore in the renewable energy sector. We are given to understand that the NBFCs such as REC, PFC and IREDA have prepared plan to invest more than 12 lakh crore in next 5 years, and these investments will be focused on RE projects such as solar, wind energy, nuclear energy, green hydrogen and green ammonia. Along with that, projects such as pumped storage and battery storage will also be given priority. In addition to that, we are also given to understand that government is exploring various options to meet funding requirements of the industry. In fact, the Ministry of New and Renewable Energy has requested Ministry of Finance to include various new category of renewable energy projects under the ambit of priority sector lending. In fact, it has also requested Ministry of Finance to increase priority sector financing limit beyond rupees 50 crore. A very significant development coming in, as these steps will help government to achieve 500 gigawatt renewable energy target by the year 2030. In addition to that, sources are also informing that the Ministry of New and Renewable Energy is in favor of launching dedicated bonds for renewable energy projects. Along with that, the industry has also urged the government to establish common, uniform eligibility criteria for all financial institutions supporting renewable energy projects.
Alright, thanks Prakash for that roundup coming in on that big renewables energy push. But moving on, then SBI is on track to reach 1 lakh crore in operating profit this year, and that's the word coming in from the chairman of India's largest bank. In fact, in an exclusive conversation, CS Sethi also spoke about credit growth expectations for the current fiscal as well. Let's go across and listen into a slice of this conversation that he then had with ET Now's Ankur Mishra.
Our medium-term goal is that whether we can become 1 trillion rupee net profit company in the country, the first company to do so. We are aspirational about that. Operating profit is run rate indicates that we should be able to reach at operating profit level of 1 trillion rupees this year. The macros are playing well, and credit growth is coming out across the segments, and our efforts to mobilize the deposits has paid dividend in Q2. We have registered good growth. So, and we were able to contain the cost of deposits also, which means that we are probably heading towards 1 trillion rupee operating profit.
Your credit growth is around 15%. It is towards the higher end of what you have projected earlier. But one of the things which caught my attention was your corporate loan book. What is happening here? Which are the sectors where this credit growth is happening?
There are several sectors the growth is happening in terms of petrochemicals is one area which we have grown significantly. We have also grown in the road sector. The road sector has been a mainstay of infra financing. Some of the road sectors are essentially the new roads which are coming in, as well as the completed road projects moving into the INVIT. At the INVIT level financing also we have done significantly higher, which is basically a cash flow based lending, takeout financing for the project financing. And we see a good number of projects coming in the solar space, I think renewable space, whether it is solar, wind or hybrid. We are witnessing a good growth in that area also.
So if you talk about guidance, that is intact at 14 to 16%, more towards 16% than 14?
16%, somewhere in the median. I think 15% seems to be more reasonable estimate as our base increases. We have now currently 39 lakh crores at that, and 15% growth rate on the domestic book seems to be a feasible option.
Right, and also deposits have grown over 9%. What are you aiming here? Do you think that with this kind of base, a double-digit growth is possible this year?
Double-digit growth is something what we are aiming for. While we already have achieved double-digit growth in the term deposits, which are almost 25 to 26 lakh crores. On that basis, we are able to grow at double-digit. 12% is growth rate what we have achieved in the retail term deposit.
All right, so that Mr. C.S. Shetty talking to Ankur Mishra post the earnings wrap-up. Now moving on, let's get you some more earnings. One of the key earning, Tata Motors, there is softness. Automaker Tata Motors, which saw a downtick in both top line as well as bottom line. In fact, PAT for the quarter gone by missed analyst expectation. PAT came in at 3,450 crore, whereas the expectation was 3,832 crore. In fact, this was the amount which the company registered in the same period last year, not the expectation, sorry. We also heard from the group CFO, PB Balaji, who spoke about the company's expectation on improvement in H2. He also shed light on the China as well as UK business. Let's listen.
JLR wholesales are expected to improve sharply as supply challenges ease, and overall we expect an all-round improvement in performance in the second half of the year and the business to become net debt free by end of this year. But the bigger challenge in China is the credit availability for the dealers who are there, and therefore there has been a shrinkage on the number of dealer outlets that are there. So what's that market would be my number one. What is the worry bead that I would have? I'll worry about dealer finance availability in China. If that is and that's an industry-wide issue, we are in a much better place because our inventory levels are very low, and customer attraction of the products, the imported products, are doing pretty well. So therefore, let's see how that plays out. But we will have to keep watching that. The compensating factor for China is UK for us, which has had a very bad patch last year. But that's coming back strong. So we should be in a position to, even if there is stress in China, we can take it in the benefits from UK. We should be able to use that.
Alright, then that right there was the take coming in from PB Balaji, who's the group CFO at Tata Motors. But let's get you some more earnings updates then. And it was a weak second quarter for Asian Paints. A dull show amid muted consumer sentiment, price cuts, increased discounts, as well as an exceptional loss coming in. However, the management also expects that the price hikes taken in this particular quarter will be aiding the company in the second half of the year. In fact, we do have Soumitra standing by with the earnings fine print as well as the brokerage verdict.
Well, if you look at Asian Paints number, that were pretty much a mess on all fronts, be it revenue, EBITDA margins or the net profit. The numbers were pretty much lower compared to what the street was estimating. In fact, if you look at the net profit number, it has missed analyst consensus estimate by nearly 36%, which is the biggest miss that we have seen in case of Asian Paints at least since 2014. Now, on the volume front, it had declined by around 0.5%, the first time since COVID that we have seen a volume decline coming in for Asian Paints. And what is most surprising here is that the peers had actually reported a volume growth, and in front of that Asian Paints has reported a volume decline. Its peers like Berger, Kansai and Akzo had seen a volume growth of nearly 4% or high single digit compared to last year in the second quarter of FY25. When it comes to the EBITDA margin, for the first half of this financial year, margins stood at close to 17.3%. This is way below the company guidance of around 18 to 20 odd %. So it remains to be seen whether the company revises its margin guidance on the lower side or not on the conference call that will be held today in the evening. Apart from that, if you look at the volume decline is also higher and the revenue fall is also higher when compared to peers, which means that the Asian Paints could have lost some market share in the second quarter of FY25. Now, why such a weak set of numbers? The company has attributed this to weak consumer sentiments, heavy rains and floodings in parts of the country, which also impacted the quarterly consumption for the company. Apart from that, the company is also saying that revenue was affected by the price cuts taken last year and the shift in product mix, which also impacted the margins, and also because of higher discounting that we had seen in the second quarter. On the positive side, the company has taken a price hike in the second quarter and is optimistic that margins could recover in the second half of this financial year. So the conference call will be held today, and the two most important things to track from this would be firstly the management commentary coming in on the demand in the second half. What are the early signs that they're seeing and how much of a benefit that they are confident of realizing on the back of the price hikes that the company has taken in the second quarter.
This is the earnings fine print. Swami, thank you so much for breaking it down. Some more cues to come in from the earning call. But before that, the whole trading session, there could be, since it's a miss on revenue, PAT and margin, the stock can take a massive hit because of these numbers. Let's see how it fares out today. The LIC CEO, Siddharth Mohanty, he spoke that the insurance giant has no plans to introduce clawback rules for agents as well as distributors. Let's go to Anurag Shah for more details. LIC also posted its numbers over the weekend. Anurag Shah got this conversation with him.
Life Insurance Corporation of India is not going to implement clawback clause for their policies. It's been clarified by the senior management of LIC during the quarterly result press conference. It's a kind of relief for 14 lakh LIC agent. Effective from October 2024, new surrender value rules got implemented, and several private insurers has implemented clawback clause of 2 years and 3 years. So if policyholders surrender policy prematurely, then insurance company will recover the commission paid to the agents and distributors. So lakhs of LIC agents were against the clawback clause to be implemented in LIC also, and senior management of LIC has clarified that they don't foresee any need to implement clawback clause for LIC policies, and they want to see the experience and later on they will decide. But in immediate future, they have no plans to implement the clawback clause. Other than that, LIC has also stated that there will be no impact on margins after the new surrender value rules, and overall commission structure, the value of commission is not changed after the new rules is also being clarified by the LIC management.
All right, thanks Anurag for that update coming in. Moving on, and let's keep it going with some earnings then, because Ola Electric has reported a smaller loss in the second quarter. In fact, the Bhavish Agarwal-led company also saw its second quarter loss narrow to 495 crores versus a loss of 524 crores in the same period last year. So that puts a number on that loss that I was just talking about. Meanwhile, when you take a look at revenue also, that also rose nearly 40% to 1,214 crore in the same period. Let's also go across and listen into what Bhavish Agarwal, the chairman and MD of the company, then had to say about the company's growth outlook.
This quarter and even then after that, October last month, we've seen EV penetration start to hit a bit of an inflection point, especially if you see the scooter EV penetration. In August this year, which is in Q2, we launched our motorbike portfolio, especially the Roadster portfolio. And the first bike is on track for deliveries next quarter. So we are on track with our motorcycle launch and execution and delivery roadmap. In addition to just the Roadster series, we also announced a bunch of other motorcycle products which will come out through the next year or two, as well as the Gen 3 platform, on top of which more scooter products will be coming. There's been some media speculation in the past, and about us working on three-wheelers. So yes, we are building three-wheelers. The beauty is that it shares the same platform as our S1 in terms of electronics, battery architecture, powertrain. Only the mechanicals are different. So you see the three-wheeler product roadmap also in that chart. So net-net, very strong product lineup over the next 2 years, almost 20 plus products to be coming over the next 2 years.
All right, so visibility on the new product line, that could actually lift the sentiment for Ola Electric. But moving on, channel checks, that suggests that the consumption companies have seen strong demand uptick across categories during this festive season. Will the momentum continue? Snehi Shah joins in with all the details on that. Snehi, over to you.
Well, yes, so Macquarie has come out with a dealer's check note on what the demand has looked like during the festive season, and they say that dealers point to a good uptick in the demand all across the festive season, and this is across categories. Now, they say that the sharpest uptick has been seen in soft drinks, edible oils as well as spices. Now, when you talk about segments, then rural has seen a gradual pickup on a year-on-year basis led by the mass end products, and even when you take a look at what urban has been doing, urban weakness is primarily in the mass and mid-end segment, and it's not across the board, is what Macquarie is pointing out. Now, FMCG dealers have felt the weakness in the urban trade channel due to the channel shift towards quick commerce. This is largely the commentary that we heard from DMart as well for Q2 numbers. Now, when you shift focus to paint dealers have attributed demand weakness due to unseasonal rains. However, they've pointed to a sharp demand uptick in volume post the festive period, and they say that there's limited impact coming in from Grasim's foray into paints as well. So that's a roundup on paints. If you talk about the premium segment, that continues to see healthy growth. However, the pace of premiumization has moderated versus historic levels. Now, HUL's Lux saw 2 to 3% growth, which was similar to Godrej's #1 soap. Now, neither a negative nor a positive impact seen from HUL's change in the soap formulation. When you take a look at Chyawanprash, then Dabur Chyawanprash sales value was similar to COVID levels on the back of price hikes. So that is somewhere where they've seen recovery. And lastly, when you take a look at beverages, Campa Cola has seen healthy adoption, especially in cola, and Reliance's distribution prowess has been subpar, is what Macquarie is pointing out. But well, yes, they're pointing out to a good demand uptick seen across categories during the festive period.
Thanks, Nehi, for that update coming in. So that's a channel check for you right there. It does look like consumption is catching up pace. Strong demand uptick across categories is what Macquarie is seeing. But moving on then with Donald Trump's pro-industry policies, Kumar Mangalam Birla sounds bullish on their investments in the country, says that they will be looking to further infuse capital when it comes to Novelis. Also adds that Voda Idea is in a turnaround mode at this point. Let's go across and listen into what exactly he then had to say.
He's obviously very pro-industry. We as Aditya Birla Group are the largest investors from India and the US. We have about $15 billion invested in the US. And, we look forward to investing even more. Going by his past, record, he's very positively inclined towards India, has a great bond with our Prime Minister. And all of these things augur very well. That commissioned in FY26, and that's on schedule. Like I said, it's a very high technology, precision technology rolling mill, and it's the first rolling mill of its kind ever being put up in the US.
Are you more optimistic about Vodafone Idea than you were, say, a year back?
Absolutely. I think that the company is well on its way to make a firm turnaround. And yeah, I think we can only look to better times ahead.
All right, so better times ahead. That's what Kumar Mangalam spoke about Vodafone Idea's turnaround when being asked about. We stay for a short break here. When we come back, we get you all the buzzing stocks as well as key brokerage notes for today. Don't go anywhere.
We live good. We do good. For good. One with nature, my signature.
Presented by Signature Packaged Drinking Water. Yeah, सुनना आजकल ये इक्विटी मार्केट ना बहुत ऊपर नीचे हो रही है, क्या करूं?
माफ कर।
पालकी, डेट में इन्वेस्ट किया है तो गोल्ड ऊपर जा रहा है, क्या करूं?
माफ कर।
माफ कर। इक्विटी या डेट?
माफ कर।
यार गोल्ड ऊपर जा रहा है।
माफ कर।
किसको? यार पहले तुम लोग ना हर बार फाइनेंशियल एडवाइस देते थे।
अभी भी दे रहे हैं। माफ कर।
यार ये
माफ यानी मल्टी एसेट एलोकेशन फंड्स जो इक्विटी, डेट
और गोल्ड
में एक साथ इन्वेस्ट करते हैं।
वाह।
जब इन्वेस्ट करना हो बेफिक्र
तो माफ कर।
म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।
For over 30 years, my journalism has been relentless, fearless, and uncompromised. My stories have breached lofty ivory towers and brought down the high and mighty. And I won't stop.
When the clock strikes 9, it is time for the news hour. Navika Kumar asks the legitimate question.
When your rights are trampled, I will be your voice, demanding answers from the corridors of power.
News Hour at 9 with Navika Kumar.
Indian markets are going to be getting a booster start.
Hi, good morning. You're watching the market right here on ET now.
Indian markets are at an all-time high. You would really pinch yourself to say, isn't this all factors aligned wonderfully well for us?
Nifty is now up a staggering 2,000 points. That impacts the market like no other. Stocks on the editor's radar. The strategy is going to be for the day.
Will this start coming up on your screen? There's a lot of green on the screen today.
Welcome back. Thank you so much for staying tuned in. You're watching Market Cafe on ET Now. Let's get you the list of stocks that you should then be keeping on your radar bright and early this morning. And Ria is standing by with just that roundup. Ria?
Yes, good morning. So let's take a look at the stocks that are going to be in focus today. We have a lot of companies reporting their Q2 FY25 numbers. The first one is Aurobindo Pharma reporting quite a good set of numbers. Now the revenue and net profit have each gone up around 8% on a year-on-year basis. Even the EBITDA margin has gone up around 11.5% and the EBITDA, and the margin has gone up to 21% in this quarter versus 19.4% in Q2 of last year. We also have Divi's Labs reporting quite a good set of numbers. The revenue has gone up around 22.5% and the net profit has jumped up to 46.5% in this quarter, and even a big jump on the EBITDA front as well, a jump of 49.5% in this quarter. Even the margins have seen a good expansion of 30.5% versus 25.1% in Q2 of last year. We also have Affle India reporting quite a good set of numbers. While the revenue has gone up around 26%, the net profit has seen a jump of 38% in this quarter, but the margins have remained largely flat, coming in at 20.9% in Q2. Let's also talk about Utkarsh Small Finance Bank, which has reported quite a weak set of numbers. Now the net interest income has gone up around 26%, but the asset quality was quite bad, which is why the total provisions have gone up around 150% to 208 crores in this quarter, and the net profit has also seen a big decline of around 55% to 51 crores in this quarter versus 114 crores in Q2 of last year, and the NIMs have also declined to 8.8% versus 9.4% sequentially, so weak set coming in there. We also have Whirlpool India reporting quite a good set of numbers. The revenue has seen a good growth and the net profit has jumped up around 42% in this quarter. Even the EBITDA has seen a growth of 20% and the margins have come in at 5.1% in this quarter, which is a growth of 31 basis points. And Whirlpool has also approved the expansion of the manufacturing capacity of the refrigerators at their Pune factory with an investment of rupees 270 crores. And lastly, we're also keeping an eye out on Biocon, since the US FDA has classified the Biocon park site in Bangalore as voluntary action indicated. So keeping an eye out on all of these stocks today.
Thanks very much, Ria, for breaking it down. The good set of numbers as well as the numbers, which was quite a miss. Of course, broadly, we've seen good set of numbers coming in from Pharma, Aurobindo as well as Davis. Let's see how these stocks react today. But Gaurav is also standing by with the key brokerage notes for the day. Gaurav, morning.
Well, yes. Let's begin our list today with trend, because now Goldman Sachs has initiated with buy rating and a target price of 8,000 rupees on this counter. What they believe is that Zudio is going to be a multi-year share gain story, and that is the reason why they are being a little bit of bullish here. When we talk about Zudio, they still believe that the market share is still small, and that is the reason we may see CAGR of around 28% over the next few years for Zudio. And apart from that, they also believe that there was some moderation in this quarter because of slowdown in urban segment, but after that we will see some kind of uptick here, and that is the reason why they are being bullish with the upside of around 25%. Next, let's talk about PFC, because this is on the back of the results. Now, Bernstein has maintained outperform rating and a target price of 620 rupees on this counter. They say that Q2 FY25 is the quarter where we see company is actually sticking to its core business, and at the same time asset quality has continued to improve, and NIMs will return to the normalized levels, and that is the reason they are being bullish here. And at the same time, when we talk about CLSA, they have also maintained its outperform rating and a target price of 610 rupees on these counters, because what they believe is that the sanctions are going towards thermal capex, which is going to pick up. Lastly, when we talk about PB Fintech, now UBS has downgraded a rating to sell, but they have hiked the target price to 1550 rupees versus what it was at 1205 rupees, and again this is on the back of the results. When we talk about numbers, Q2 was actually strong for the company. We saw the company has now said that new initiatives will drive EBITDA break even by FY27 is what UBS believes, and at the same time they also believe that the steady renewable pool is likely to drive the profitability, but all these factors are already priced in, and that is the reason why they have maintained their sell rating. So definitely watching out on all these companies on the back of the brokerage note that we have received today.
Thanks, Gaurav, for that update coming in. Let's keep it going with earnings though, because when you take a look at a couple of counters, Britannia as well as Nykaa, currently what is being penciled in terms of their second quarter is a decent quarter. So when you take a look at Britannia first, it is expected that improved rural performance is likely to aid volume growth. In fact, we do have Snehi who's standing by with the update on exactly what is being penciled in then. Snehi? Tell you what, let's also take a closer look first at what is being penciled in when it comes to Britannia, and what really we then are expecting. When you take a look at revenue, an uptick of 7.6% is what is being penciled in. Profit after tax also 7.4% uptick right there coming in. In terms of the kind of expectations that we have coming in for Britannia, when you take a look at what else is expected, we're expecting volume growth at 10 to 11%. Input cost also is expected. Input cost inflation specifically is also expected to hurt margins. So that is also something that we're penciling in, at least when it comes to Britannia. And there's negative pricing growth that is also being priced in at this point, that is being expected. Price cuts will be aiding market share, and that is something that we're also keeping in mind, at least when it comes to Britannia. In terms of the key monitorables, then there's demand outlook as well as new ventures, raw material cost as well as pricing action that we're keeping an eye on. So those are the key monitorables and what they look like at this point for Britannia as well. Let's also take a quick look then at Nykaa and what is being penciled in for that one. Let's try and see if we can get Snehi line reconnect. Right, so let's also quickly take a look at Nykaa then and see what that one is expected to do, because when you take a look at the revenue, uptick of 25.2% is what is being penciled in. Profit after tax, uptick of 4.2 times coming in for that one is what is being penciled in, and quite a few margin expansion drivers that we have in mind when it comes to this one, Priyanka.
Right, but then the key monitorable is going to be that how's the rural consumption faring out for Britannia. Britannia is completely a volume game. But then moving on, let's get you some of the key stories from the globe. In fact, Justice Sanjeev Khanna is set to take oath as the 51st CGI today in a ceremony presided over by President Draupadi Murmu at Rashtrapati Bhavan. Now, this marks a new chapter for India's judiciary as Justice Khanna succeeds Justice Dhananjay Y. Chandrachud, who retired recently on November 10 after distinguished 2-year tenure. Moving on, talking about Zomato. In an attempt to curb food wastage, food delivery platform Zomato has introduced a new feature called Food Rescue. Through this feature, now Zomato would offer cancelled orders at a discounted price to nearby customers, and according to Zomato, around 4 lakh orders are already cancelled, and according to Zomato, around 4 lakh orders are cancelled every month. Moving on, Israel's Prime Minister Benjamin Netanyahu has for the first time, admitted that Israel was behind the attacks on Hezbollah's pager and walkie-talkies, which killed at least 39 people and wounded over 3,000 people. Previously, Israel had not publicly claimed responsibility for the attacks on Hezbollah.
Rather than moving on, the drama around the 2025 Champions Trophy continues as the Pakistan Cricket Board has officially announced that India will not be travelling to Pakistan for Champions Trophy. Due to security concerns, BCCI has informed ICC that India will play all its matches in Dubai, including the highly anticipated match against Pakistan as well. Moving on then, air quality plummets to hazardous levels in Pakistan's Lahore, with average AQI reaching the 1,100 mark. The Shehbaz Sharif administration also has put in place precautionary measures which include shutting down schools as well as banning the entry of heavy transport vehicles into the capital on Fridays and Sundays.
All right, but then let's get to a key comment coming in from Mark Mobius. Mark Mobius, who sees where do he sees value in the country? He used to be bullish on Vodafone Idea earlier, but what is his stance after the fall, and what does he likes in banks? Let's take a look.
We're still looking at it. We haven't made a decision on that yet. ICICI is much more diversified, number one. And by the way, I must say that we're not big fans of banks to begin with. It's quite unusual that we would go into banks, and simply because they generally tend not to be too transparent. But I think the difference with ICICI is that it's very well diversified. As you know, there's been some massive semiconductor investments taking place in India today. So it doesn't mean that manufacturing will stop or decline in China. What will happen is the high labor input manufacturing in China will move to India and to other parts of the world because labor rates in China are going up, not down, and also the population is aging. So the combination of these factors will be very, very beneficial for India going forward. And I believe India will become a major force in high-tech technology, innovation, and manufacturing. Of course, when the markets go down, it's a good time to be increasing. So when you see a correction, doesn't mean that this correction is over. You'll probably see a little bit more downside, but it's a good idea not to worry about these short-term movements. Look at the long-term growth of the Indian economy, which is continuing. And now with Trump coming in, I believe the global economy would be much better.
All right, and that's the word coming in from Mark Mobius. But with that, we're completely out of time on this edition of Market Cafe on ET Now. From me, Shreyanti Singh, Priyanka Uppal, as well as the entire team that put this show together. Thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.